Hello and welcome to the Gold Goats and Guns Market Report for today, the 5th of September, 2021. My name is Tom Luongo. We have a lot to talk about. No real housekeeping this week, other than to let you guys know that we did have a meeting, Dexter and I, with Rockfin over on Friday. And he and I are discussing how we can incorporate that into our service, because I know a lot of you have asked me, like, do you have a backup plan for PayPal if things get weird, yada yada yada. Just want to let you guys know that we are looking at various alternatives, and as of right now, we're not looking at changing anything per se, but we are looking at potentially adding something else to the system, but only in order to try and make things more organized as opposed to less, because as Dexter yells at me all the time, you've created a mess and it needs to be cleaned up. And he's absolutely right about that. So I'm not going to argue. But just to, I guess, let you know, that's what's going on there. All right. Real quick, since we did a big special report yesterday, this one shouldn't be very long today. Let's get started. First things first, I'm going to make it abundantly clear that the biggest change that would occur it will be me giving up my U.S. citizenship and taking my family overseas if these people are serious about drafting women. This has been a dividing line for me, and I have not talked about this for a long time. But this has been a dividing line for me between me and the United States for a very long time now. Since I became a father, that is the one thing that I will not cotton to. I will not. And no father in his good conscience worth a shit should allow for the state to co-opt and force their daughters. It's already objectionable about their sons, but daughters in particular, to go fight in some corporate banker war overseas. Not going to happen. Or worse, to subjugate and their own people under martial law, which is more likely what's coming. So, just wanted to let you all know, while I talked about all these things yesterday in yesterday's special report about the finding your tribe, staying in place, and all the rest of it. The truth of the matter is that this is not acceptable. So, while we may not have a tremendous amount of pull in this world, every one of us who is an American, it's time to make it abundantly clear to all of your congressmen that you're not going to vote for the National Defense Authorization Act, its extension, with this amendment having passed committee. It's just not going to happen, because if you do, you're going to lose your seat. Because I will vote my dog in to Congress, who is a far better human than my congressman if they vote for this, than anybody else. I mean, I honestly would vote a Democrat in just to make sure that everything collapses that much faster. I mean, that's how angry I am about this. And I'm trying to keep it under control. I already went through the 30-minute spitting, frothing, screaming about this morning. And this will, teach me to not read antiwar.com on a regular basis, because they're the ones who've been on top of this story for a long time, and it's just blindsided me this morning. So just wanted to let you know about that. The other thing I want to talk about this morning, real quick, is, have you noticed how many stories had to be sent out and then retracted in literally the last like 3 days? Like, the acceleration rate is not just happening in terms of the quickness with which they're trying to erect this technocratic, bioterror state, replete with pre-crime. It's the amount that they're actually lying about everything. So now they're lying about hospitals being overrun with unvaccinated people, and or being overrun with people overdosing on ivermectin over horse dewormer. It's just ridiculous, the level at which this is going on, in order to try and further divide the vax from the unvaxxed, the starbelly sneeches from the normal sneeches. Like, they're literally trying to get us to start fighting with each other. They're literally trying to get us. I saw a great meme yesterday. The FBI, like, poking, like, so it's like I used the Bitcoin, the picture of the guy poking Bitcoin with the stick, and I said, "Please, Bitcoin, do something." It was something like that, except it was the FBI. Please, guys, start a revolution, start an insurrection, and the Chad icon was like, no. Like, we see what you're trying to do here. We see you trying to make us angry. We see you trying to bait us into throwing the first punch. It's not going to work. Anybody in the audience who may or may not be a spook, it's not going to work. Okay? We see your game. It's pretty obvious. You've tried to turn a whole bunch of people who just kind of wandered around the White House after being invited in. You tried to turn that into an insurrection. It's pathetic. Please stop. Okay? It's pathetic. It's beneath you. Please stop. Start acting like men. Okay. So, the amount of media lying and craft that's going on at this point has ratcheted to the point where they're not having just torched their own credibility. They have now jumped the shark, burned it, done the Wicker Man thing, and set themselves on fire like a bunch of Buddhist monks during a war rally, an anti-war rally. Like, it's insane. And yet we're supposed to like react as if our hair has been caught on fire by their self-immolation. Like, no. Stop it. Please start acting like men and stop acting like frickin' pussies. It's really annoying. You're not getting my daughter. Get over yourself. Last thing I want to talk about this morning, which is as important as that, is internationally. I want to talk about China. It's pretty clear. I just read a great article, or I wouldn't say it's a great article, but it's a good article over by Michael Avery from Rabobank over on Zero Hedge. I'll try and put a link in the description. It's long. It's a lot of words. I'm not even sure that most of those words were needed, necessary, or came to any great conclusion, but it is a kind of evolution or trace of the historical precedent for what Xi Jinping is trying to do in China. And I applaud Michael's attempt at trying to figure out what all this means. It's pretty clear it means globalism on China's terms, not the West's terms, which means a rejection of technocratic neoliberal quote-unquote capitalism, which is a bad way of describing what we do, because none of what we do is actually capitalism. While Lenin and Marx try to call what we do capitalism, it is not capitalism. Okay? It is corporatism. It is not a natural evolution of capitalism. It is a natural evolution of what happens when you have states. States lead to corporatism. Free markets get co-opted by states in order to eventually turn them into socialist nightmares, which communists try to faff away, and I use that word explicitly, try to faff away through mental masturbation, all of the socialist underpinnings of the process in order to justify communism. It's all literal faffing. But, you know, it is what it is. So that's what Xi is doing in China. I think Avery is right that Xi is trying to create the new communism, Chinese style. And will that mean a refutation of Deng? Of course, it's already in process. Will it mean China will be able to maintain, to keep and maintain the to acquire, keep, and then maintain the social what Martin Armstrong is predicting by 2037 being the center of world capital? It's possible. They've built up a tremendous capital base, and they can live off that for a long time, just like we built up a tremendous capital base and lived off of it for a long time. China's going to run into the same problems we did, and they're going to probably fall apart twice as fast as we did. I don't think, if China does wind up taking everything over by 2032, 2037, they won't be in charge for more than 20 years. They will collapse 3 times as fast as we did, because their capital base is built on a bigger lie than ours was. And that's the point. When you remove market forces from a system, and China is not completely removing market forces from their system, they're going to leave the vestiges of whatever they think they can get away with for as much as possible in order to keep as much control as possible. You can live on that with a big capital stock for a long time. It's the same thing here in the United States. This is why I have such a problem with so many kind of like first or second year Austrian / gold bugs. Austrian economists slash gold bugs who never grow up, never seem to get past the sophomore year of Austrian economics, is to realize that, yeah, you may be right in the long run, but it doesn't matter. How you don't have no idea what the long run's going to be because you're not willing to sit down and do the hard work to understand how they can continue to kind of morph and change and extend and pretend the system that's collapsing, because everybody wants to believe in the system that hasn't collapsed yet. And that's where we are. So, you know, I was one of those people in 2005. I'm not one of those people today. I honestly believe the current central bank regime could last another 10 years. Doesn't matter, it's still going to lose. And then, you know, everything could like move over to China for 20 years after that. I won't see any of this. I could give a shit at that point. Okay? Or it could all collapse a lot damn faster because Bitcoin. Like, I doubt it. These government forces are enormous. But I mean, something else, you know, I mean, when we talk about this stuff, there's so many things that are outside the purview of our normal, even 2 to 3 sigma. We you know, here in Gold, Goats, and Guns, we like to talk about things within, you know, well outside one standard deviation from the norm of what is possible to happen. You know, we live, and certainly I live, at the plus or minus 2 to 3 standard deviations, right? Well, no one's talking about 6 sigma events. No one's talking about, you know, I mean, I am every once in a while, but, you know, no one's talking about a pole flip or, you know, a massive asteroid impact or something that would literally change the face of the world, right? And some catastrophic event, physical event, that would change the world as we know it. But they're out there. If any of you follow the suspicious observers, you know that the possibility of something like that happening is rising every day as we go through this next 30 to, you know, these next 30 to 40, 50 years, simply because of where we are in the solar cycles, right? And the cycle of the planet through, and the solar system through the galactic ecliptic and all the rest of it. These are physical cycles that we cannot avoid, that we have no control over whatsoever. And so, you know, all the best laid plans of mice and men come to, you know, go gang-a-glay, you know, because something bad happened, because the sun burps. Which could easily be the trigger for, you know, why China gets all the capital in 15 years, and has nothing to do with the United States. Right? It's just, these are things that we have to, you know, keep in mind when we're trying to plan for all this stuff, but at the same time, understand what your personal red lines are, and then act according to them, and don't look back. I think that was the lesson from yesterday's video. Okay. And watch China very carefully, because we have probably seen peak growth in China, is the ultimate argument here. And Western markets don't know how to deal with this. And I can tell you how Western markets are going to deal with it. And everybody who's thinking that the Fed is not going to taper because they're worried about, you know, because they're going to continue to be, you know, neolibs, are reading what's happening in China very carefully. And they understand exactly what has to happen next, which is the dollar has to strengthen. Western financial markets have to strengthen fundamentally if they're going to survive this. Now, not be further willfully being undermined. See, the problem with the Marxists is they really do believe their own bullshit. They really do believe, well, Marx was right, and capitalism is going to collapse because of this, this, and this, because of all its internal inherent contradictions, which are all, you know, based on fallacies. No, it's happening because it's willfully being engendered by literal fucking communists who got control of the levers of power and now are trying to create communism out of whole cloth. It's retarded. Like, it's the biggest self-referential circle jerk I've ever seen in my life. Listening to the communists go through their rhetorical dialectic is literally the biggest case of, you know, mental and rhetorical masturbation I've ever seen. Because they don't understand anything. They just want to justify their envy. and their anger and their nihilism. And Xi is talking about trying to end the nihilist part, but he's not really. He thinks he is because he's, suffused with power, and he's suffused with the same kind of insanity that happens with all men who have too much power. He's not going to remake the world. He's only going to hasten this world's demise. All right, let's move through. So gold this week was very good. The action in gold was good, but you'll notice, look at the big heavy green line where we've reached, now what we've reached, right? It was a nice close, and I love to see gold closing after a big run up. Always to see new high closing prices, so week to week that we're constantly pushing to new high close. We're not, falling back into here. And then also note that all of these previous attempts to get through the 1835, 1840 area were met with a smackdown to 1815, but we got the close this week. Following through last week's close above 1815, we now, again, have a higher close. So this is good. So this week, we absolutely need a breakthrough of 1835, 1840, and I would like to see that on a daily closing basis at a minimum. If we get one day where we close above 1840 and force a little bit of short covering, because there's a massive amount of short position. I don't need to go look at the COT to know what's going, the COT report to know what's going on here. It doesn't matter. It's 2 weeks out of date anyway. To know what's going on here. There's a massive amount of shorting here. Okay, so a daily close above 1840 should at least force somebody to respond to it and try and push it back down. And if so, they're going to do so with heavy volume. And if they if they were able to break it, as long as you get the daily close above it, like that's enough to signal to everybody the bears are losing. It may be enough to get it to really push. But I'll just take a day just to give me that signal. Because all that means is then the bulls are going to come in at higher prices. They're going to come back in at 1830 or 1825 as opposed to waiting until 1800 to dive back in. They're going to be pushing up against this level again and again and again. And eventually they'll break through it. Like definitively. So I'll take a day. But I'd rather a week, obviously. Take the day. All right, so that's what's happening in gold. Gold looks good. Silver follows through on last week's reversal signal, right? We have a 1 bar weekly reversal here. For all of you newbies in the audience, when you have a trending movement in one direction, you're looking for what I call a reversal signal. It's a very simple thing. You're looking for a close, which in the case of an up bar is the top of the bar, above the high of the last bar in the trending move in the opposite direction. So after a downtrend, we're looking for a close above the high, the last high within the down bar, within the downtrend. It can happen within 2 bars. If it happens within 1 bar, it's a stronger signal than when it happens within 2 bars, and 3 bars is not a reversal signal. It's a coin flip. It confers no net benefit. 85% of 1 bar reversals hold and follow through. 65% of 2 bar reversals hold and push through, and 50% of 3 bar reversals. So that's useless. It's not a benefit. It's a coin flip. Half of them fail, half of them don't. Anything that gives you any trading edge that doesn't give you at least 55 or 60% pot odds is a bet not worth taking, because there's no potential profit in it other than, hey, you like betting, right? So you have better odds at the casino, truthfully. So given that we had a nice follow through after last week's 1 bar reversal, but we're still trapped here below the $26 marginal line, which is the top, which is the average price between the low here around 22 and the high around 30. And there's a whole lot of closes and highs and lows right at the 26 level, because that's where silver was being held before. So we still have a long way to go to even get back to even in silver. But I will say this is better. What this tells me is that we have that this low is good. This low, because this low has been negated. So we're now probably permanently moving away from the 22-23 area, and we can start looking at 24, the 23-24, 26 area as solid. And given the state of the rest of the industrial metals market, even with the whole narrative that China is slowing down, which it is, but it's being slowed down by Xi on purpose. It doesn't necessarily mean that it's going to be bad. It just means that, well, it does. I mean, for the global economy, it just means that China is going to become more domestically focused. It's in the process of having that happen now. It's why we're going to see export numbers and import numbers shift. Why we're going to see growth rates, GDP growth rates, slow. We're going to see all of that stuff. And classic market analysts are going to look at that and go, oh, neo-Keynesian analysts are going to go, oh, that's terrible. And it may or may not be. Okay. The currency will probably start to weaken. I'm telling you that China, the yuan could easily weaken against the dollar here. And again, we will see a dollar, and that will help fuel a dollar upwave. It's important to understand that. Because the Chinese yuan right now is way too strong. And I saw a lot of tape painting on the close. If you go look at the offshore yuan versus dollar chart on investing.com, you go look at the 15-minute chart and tell me if somebody wasn't trying to paint the tape after the close. Right? It was actually really quite pathetic, because they didn't want to show a breakdown or in terms of strength. So regardless, let's move forward. All right, so Bitcoin. So we had a nice close this week in Bitcoin, but not quite 50,000. So it's obvious that 50,000 is the line that everybody is trying to hold. Obviously, the shorts are setting up at 50 grand. We closed right below 50,000, like 49.8. This morning we were trading right above 50,000, which is always interesting. So, and note that volatility is slowing off as we get to this 50,000 level, because it's a nice round number, and round numbers tend to, they don't necessarily mean anything technically, but you can always expect them to act like a magnet for a certain amount of time. Okay, so 50,000 wasn't really all that important in the past. It was more like 48, yada yada yada. So, but now 50 is the big deal. And once we definitively move through 50, Bitcoin is going back to 60. With the internal pressure happening within the crypto markets, I will be shocked if that does not happen. So I did forget to animate the Decred chart this morning. So I apologize, but none of this stuff back here matters. What really matters here is that we're seeing the same thing in Decred on a weekly basis that we're seeing in Bitcoin on a weekly basis. So Bitcoin, like the Dow, is kind of sauntering vaguely higher. Decred is absolutely capped below 180. And when we look at the monthly chart, we can see exactly why that's significant. For Decred to not close above 180, it was the opportunity here for a 2-bar reversal after this 2-bar. So we had this 2-bar reversal. So we had this nice big 6-month run up and then a 2-bar reversal. Closed finally below the low here. Didn't close here. That's not a reversal signal because we didn't close below it. Oh, did we plumb the depths? Yes. Did we close below it? No. So then the very next month, we closed below it? Yes. Did we plumb the depths? Yes. Was it bearish? Absolutely. But given that all depends on your perspective. If you're an investor who was in at $90 to $100, all of these closes in here are incredibly bullish because these long tails are telling you that there is no supply between $90 and $150. That every time it gets down there, it happens on a washout, and then price is immediately lifted later in the month and constantly pushed back higher. So while there's a lot of, I'm not angry at Decred for not pulling off a 2-bar reversal here against this 2-bar downtrend by not closing above 180 because of all the work that had to be done in order to stabilize the price above 150. But it would have been really nice to see, because then it would be just incredibly bullish as opposed to just, bullish. If we had gotten the monthly close in August above 180, I would be like, guys, if you don't back the freaking truck up now, because Decred's going to 1,000. And the reason I would say that is simply because of that. And it's interesting how people, I keep hearing from people over and over and over again, very smart market analysts, from Dexter to other people that I follow on Twitter, who really do believe that because we live in markets that are fundamentally manipulated, that charts don't matter. And I know the traders in the audience are laughing right now when they say that. And I say, well, that's because, the people who say things like that aren't traders. Traders still trade, and they still run their algorithms, and they still run their trading systems, and they don't care. They just incorporate the new paradigm into their systems. But the basic rules of trading are still open, high, low, close, and pot odds of going higher versus going lower. It really is just that simple. You can make the markets as freaking weird as you want. But I'm telling you, you look at enough charts, you can and you internalize the basic rules, and then apply whatever you want on top, other information on top of that you want that works best for your brain, and you will see a very clear picture over and over and over again. So for me, I would have loved to have seen a close on a monthly basis in Decred above 180. When I look at the Decred versus BTC, because whenever I do Decred, I always try to put up the chart versus BTC, because to me it is the best altcoin for challenging Bitcoin, Litecoin, for challenging Bitcoin in the long run for being a potential reserve asset versus Monero or Bitcoin Cash or any of the others. I think Decred is the best designed of all the coins. It is also coiling versus Bitcoin as well. It looks to me like it's setting up for a big pop high. So, and the on-chain statistics are saying the same thing. So I wouldn't worry about that too much. All right, moving on. I did not update this chart. This was the one chart that I forgot to update. And I want to just bring this up again. So this is the same chart that I had on Wednesday. I forgot to actually X this chart out. I got lost reading a whole bunch of stuff and trying to prepare my opening remarks that I forgot that I had skipped. So, but let's talk about the US 10-year in the same way that we've talked about in the past. The Fed is going to have to continue driving capital home. The US yield curve across the board, I looked at it before and I decided not to build a slide for it, moved up about 3 basis points last week. So continuing to push a little higher, but we had a massive inflow, right? The Fed driving capital home since the June 16th meeting. A lot of people are trying to get up my ass saying that, oh, the Fed didn't defend the dollar and they're not going to, and blah, 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 and it's all going to be terrible. I'm like, okay, yeah, you keep telling yourself that if the Chinese yuan drops below 6.4. Like, you realize that part of the reason why the Chinese economy is, quote unquote, the headline numbers are all slowing down has nothing to do with COVID. It has to do with the fact that for the last 18 months, the US dollar has been in a massive bear market that has taken over 10% off the relative value of the Chinese yuan. So it's risen over 10 or 11% versus the dollar. Like it or not, the Chinese still export a crap ton to us. And while those numbers are shifting away, like it's not happening at a rate that's, catastrophic. So I don't know what else to tell anybody, but why are you shocked, right? And yet the trade surplus is still very strong, and they're going to take all that money and they're going to deploy it across Central Asia, and China is going to do what it's going to do over the course of the next 10 years. And I don't think for a minute, I don't think that Chinese stocks aren't going to do well. They're going to do poorly in the short term while everybody gets adjusted to the new normal that's coming out of Beijing. But that's where we are. It still doesn't mean that the Fed isn't going to try and drive capital back to the United States, because what else is the Fed's job? You really think the Fed's job is to support freaking Davos and the Great Reset and the destruction of the United States? Or is it to, is it to enforce dollar hegemony around the world? Like, I don't understand what people are thinking. Like, while Davos is the real problem, I agree. Obviously, I'm the one who pretty much came up with the theory. We're not going to hand the world to China either. Like, that's just dumb. So the Fed's going to start playing real economic warfare with the Chinese while this is going on. So it's another way of looking at why the Fed didn't tighten further at Jackson Hole, but left themselves the architecture to tighten whenever and however they want to. They have all the tools in their pocket right now. They can taper, they can raise RRP, they can cut the rate of the foreign repo facility. They have all these little options and in markets that are this overvalued and this overlevered, tiny moves create big effects. And nobody, I think, understands that better at this point in time than Jay Powell. Otherwise, he wouldn't have done what he's been doing. Otherwise, either that or he's a complete idiot. And I just can't buy that. I just can't. So, all right, moving on. I want to talk about iron ore. So the way the market has reacted, I want you to look at the price of iron ore. It tripled over the course of the last year, from around $60 a ton to over $220, almost a quad, right? Almost a 4x move. Hey, almost Bitcoin-like. But then it has collapsed. And looking over, and everybody's talking about how it's all about China and blah. I'm like, I went through the Chinese numbers in July when this is the weekly chart when this happened, and I'm like, I don't see it. This is the changeover between the, from 1 month to the next is where this gap in the chart comes from. The futures market, the futures contract rolled over at the end of the month. We come to the next month, and there was a big gap in the chart. Happened over a weekend, obviously. Blah blah blah. We're down from 220 to 145 and probably going lower. Well, not the fact that, iron ore wasn't ridiculously overvalued. The Chinese stockpiled a lot of iron. They stockpiled a lot of copper. They're preparing for a quote unquote war. And they're preparing for a different scenario than we have currently. And what's also being played here is a game of, and this is coordinated across all futures markets. I looked at US iron ore futures, Shanghai, and Singapore. This happens to be the Singapore chart. Doesn't really matter. They all say the same thing. So it's not like one market's trying to lead the other. Maybe it is. If anybody trades iron ore futures, you can let me know in the comments as to whether or not this is being led by the COMEX, which is then translating over to Shanghai and Singapore, or whether it's Singapore leading the way or whatever. I don't know. Whatever. It doesn't matter. What matters is that iron ore has corrected, which is also going to correct shipping rates, by the way, because a lot of the rise in shipping rates have to do with the demand for iron ore, bidding up the price of ships, bidding up space on ships. And that's been going on now for over a year. So we should actually see shipping rates from overseas start to collapse back to normal. $145 a ton for 62% iron ore is an insane price still. So this market has another 25% that can come off the top, and iron ore would still be expensive by historical measures. This is how much they screwed up the economy last year. So in effect, the iron ore prices coming down are not an indication that the global economy is, oh my God, it's slowing. It's no, it's returning to something close to normal. It's actually a good thing, because then shipping rates are going to come down, and people will be able to ship something other than iron ore. Okay, we might actually start to get silicon to move and all the other things that need to move in order to start building chips again and everything else. Iron ore was literally suffocating the entire global economy because the prices were so high, because the demand was so high. This coming back to normal means that we might actually be getting out from underneath all of this COVID nonsense. This is why they're spinning up the Mu variant. Please, like, piss in one hand and shit in the other and see which one fills up first. It's ridiculous. I cannot fathom why. I can fathom why. I cannot cotton listening to these people anymore, and neither should you. It just makes me sick to my stomach. So this is actually a good thing. The Western press is going to try and spin this as, oh my God, China's slowing down and everything's going to be terrible and there's going to be a crash, and oh my God, the Fed better do more QE now. The Fed should taper into this, because the economy is actually returning to something close to normal. Even the jobs report on Friday was a big miss. Ooh, yeah, because we're still paying people to stay home. Everywhere you look, everybody's hiring. Everybody. I went to Advance Auto Parts to pick up a friggin' package that UPS left there the other day. Hiring, all shifts. Half of my restaurants in my hometown, little town, still looks depressed. Still looks like it did 13, 14 years ago, after the housing market completely collapsed the entire town. Everybody's either are closed. Half the restaurants are closed on Mondays, so they can't get anybody to work. Half of the businesses are all like desperate for basic things like baggers and jockey, registered jockeys and all the rest of it. It's like, it's all a lie. The slowdown's being created by bad government policy. And the longer that the Republicans hold out here, or people like Manchin and Sinema refuse to pass these ridiculous spending bills, which we do not need, the quicker we get back to normal and we break the backs of these people. They need that $5 trillion, and they can't get it. So it's all kind of good in its own weird way. Last thing to talk about before we leave, because I'm going to let you go, because it's 35 minutes and I'm already 8 minutes over my limit that I set for myself when I started, which is the Dow. The Dow is becoming less and less and less volatile. I want you to look at these numbers are insane. To remind people who are new, these are the probabilities of whether you're going to break the previous high or the previous low. When we had normal volatility, meaning when the range was around, in this case, 700 points, these numbers should sum to 100%, right? If we had a perfectly normal week with a bar that opened where it closed and went up an equal amount from when it went down, these numbers would literally be 50% apiece. And it would be no benefit. Well, what we have now is so when the volatility is lower than that, when the range is from last week is significantly lower than the normal range, the average range, or in this case, the median. I use the median for all averages, FYI, for those statisticians in the audience. Then these numbers will be higher than 100%. When they're 162%, that's like 3 sigma less than normal volatility, because the farther we get away from the 100, the more the thing skews. The same thing when these numbers are less than 100, that's greater than normal volatility. Okay, right? And with the Dow, the data set is pretty strong because we're talking about the last 190 or 200 weeks, and it's all within the last, it's all within 20-25% of each other. So all the numbers are really tight. Unlike Bitcoin, where the spread of the numbers is so wide that the median price is almost irrelevant, because the bigger the bigger the range, the harder, the less the averages and things like this mean anything. And it's just the way things are, because standard deviations are higher, because yada, yada, yada. So seeing something like this, and after a follow-up of that one, so we had this big ugly bar here a couple of weeks ago. Then we trace an inside bar, breaking neither the previous high nor the previous low. We get an outside bar to the upside, where we break the previous high but not the previous low on unbelievably low volatility, following up a week where we had really low volatility after a week of greater than normal volatility. So the Dow just doesn't know what to do here. It's literally waiting for the other shoe to drop. It is caught between the, oh my God, China's slowing down and COVID narrative, and is the Fed going to, and the Fed wants to taper, and is the expansion in the US going to be sustainable? And so every time the markets perceive a bad outcome, the Fed, the Dow doesn't move anywhere. But the fact that it keeps pushing to new highs and shows no weekly closing bad outcomes, meaning no reversal signals, no, even this violation here isn't that big a deal, because it didn't turn into a reversal signal, and then we keep grinding higher. When you look at other things, and I always put up like the Euro Stoxx 50 or the German DAX or even the FTSE 100, when you see when you compare the Dow to other major indices for other major markets, you see much weaker charts. Again, it doesn't matter whether the markets are manipulated or not. They're all manipulated the same way, so it's a systemic error. So when you see the DAX is weaker than the Dow and the Euro Stoxx 50 is weaker than the Dow, that's telling you that the Dow has, proportionally speaking, greater inflow than those do. I mean, it has more respect than those markets do. And so once a major policy shift occurs, and I think the next major policy shift is for the dollar to go bullish, not bearish. We just had our bearish dollar moment. The next thing that's going to come out of the Fed's mouth is going to be a bullish dollar statement, probably at the next FOMC meeting. That if that's the case, I actually expect the Dow to do something it's not supposed to do, which is to go up when the Fed gets bullish on the dollar, because it's going to be bad for Europe. And that ties into the morning munchings that I wrote on Friday about the German elections and all the rest of that's happening there. There's a lot of potential exogenous events here that could send the Dow to 40,000 and send the dollar index from 92.5 or whatever it is today to 94 or 95. Again, it won't be a long-lived dollar rally, but it will be significant enough to change the world. Okay? We can have a big short-term dollar spike that would literally change the world. And that's what I'm banking on. That's why I don't care about what happens from, for the most part, from week to week. We're looking for the little signals that'll tell us what's going to happen next. All right, that's what I've got for you for this week. I am going to cue the music, and you guys be well, and we'll talk on Wednesday. All right, so take care and keep your stick on the ice.